In the news this week, with Biden officially dropping out of the presidential race, it's a safe bet that political news will dominate the headlines. But in the coming days, we will also see the release of critical economic data. Let's dive in. Before we begin, remember to like this video and subscribe for more economic updates. The week's most anticipated numbers are expected to be generated on Friday when the Commerce Department releases its Personal Consumption Expenditures Price Index for June. It will be the last report on inflation before the Federal Reserve assembles next week for its July policy meeting. Economists expect to find that annual PCE rose 2.4% last month, which would be 0.2 of a percentage point slower than the rate in May. Core PCE, which excludes food and energy prices, is projected to come in at 2.5% year over year, which would be 0.1 of a point slower than the May figure. Currently, core PCE is at its lowest level since March 2021. The Commerce Department also will deliver another widely anticipated number this week, the first estimate of gross domestic product growth for the second quarter of the year. The consensus estimate says GDP grew at an annualized rate of 1.9% last quarter, which is 0.5 percentage point more than the pace of economic growth set in Q1. Some economists suspect that the outlook for GDP this quarter may be improved on the strength of a better-than-expected June retail sales report. Also this week, S&P Global will check in with 2 updates on the current condition of the economy with the release of its flash manufacturing and services purchasing managers indexes for July. The flash manufacturing PMI for July is expected to come in at 51.4, 0.2 of a point below the number for June, but above 50 and therefore still in expansion territory. The flash services PMI number is forecast to come in at 55, also slightly below the June figure, but still reflective of expansion in the sector. Finally, we'll get more updates this week on the condition of the housing market with the release of the June numbers for sales of both new and existing homes. The NAR report is expected to show that sales of existing homes came in last month at a seasonally adjusted annual rate of 4 million, which would be about 100,000 fewer than the rate in May. Overall, the sales rate of previously owned homes continues to run about 30% below where it was 4 years ago. The following day, Wednesday, the Census Bureau will deliver the figures for sales of new homes last month. Economists expect to see that new residential sales landed at a seasonally adjusted annual rate of 630,000 last month, which would be slightly higher than in May. As with sales of existing homes, sales of new single-family homes are running about 1/3 behind where they were in 2020. That's it for now. Join us again on Saturday when we let you know what actually happened. This is Devlin Steele for Augusta Precious Metals signing out.